I'm joined now live from Singapore by Chin Loo. Thio Chin Loo, thank you so much for joining us. So, what do you make of the package from the European Union and the action by the ECB?
Well, I think it's provided a breather to the euro. I think in terms of the headline announcement of the very big aid program and the commitment from the IMF and the EU in particular to show up confidence, I think we had that trade in the morning where the euro jumped all the way close back to 130 again. I think the next few days will be critical in terms of establishing market sentiment as to whether they feel that the worst could be over for the euro, or if not, could this long period adjustment ahead for the eurozone that's inevitable to try to better fiscal shape. You know, how will that play out in terms of growth? And I think that in those couple of days of reckoning, I think we could get the euro trade a little bit higher, even beyond 130, you know, but I think the long-term fortunes for the euro is still fairly bleak.
Interesting. I mean, we had Barclays Capital traders saying today that investors should use this rally in the euro to make fresh bets on the currency's slide. They say it's going to go towards 120 within the next 3 months. They say as countries tighten up fiscally and then you have the loose monetary policy, that's just going to be a negative for the euro. Do you agree with that then?
Well, I think the arguments are there. I think in terms of what Europe has to do to try to solve its fiscal crisis and as well restore confidence in the euro. I mean, what's going to happen is that the eurozone economies will go into a big debt deflation that will inevitably see the euro having to take a big chunk of that adjustments via a weaker currency. So I think that is obviously going to be one stress point that will weigh the euro down. And the fact as well that the ECB is really unable to do anything in terms of rate hikes for many years, where else we could get to see other G3 economies, particularly the US, you know, start to raise interest rates perhaps back in the next year. So that kind of interest rate differential story as well would certainly drive the euro weaker against the US dollar.
And what do you think of Jim Rogers' prediction that the euro's got 15 years left max? I mean, do you think that the euro is doomed? Has this crisis shown that?
Well, I think this crisis has shown that in terms of currency regime and the fact that you have to work within a currency regime with rules that are generic for all economies with different speeds of growth and different structural issues, as well as competitiveness. You know, a single currency with a single monetary policy can be fairly restrictive in terms of how you manage the economy. So I think this has come to light, and the fact that if they do want to keep the eurozone and the euro in place, you know, the adjustments would have to come through, you know, could be fairly harsh in terms of crises like these, where the currency would obviously take a big part of the hit. And in terms of the lack of flexibility on the monetary front, it also means that, you know, confidence will take a longer time to be shown up, vis-a-vis, for example, the US, where monetary flexibility is a bit, is much better. So I think we do feel that the eurozone will have a longer time ahead itself to try to right things vis-a-vis the US, where things could happen a little bit quicker. So we wouldn't as well suggest finding a bottom for the euro too soon.
Chin Loo Thio from BNP Paribas, thanks very much for joining us.